Boom, 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 boom. Hello, Loic. How are you? Euro USD. Euro USD. Where are you? All right, everybody. How are you guys? How are you? How are you? I'm fine. I'm fine. Let's just wait for everybody to join me. Listen, if I don't have more than 20 people joining, I'm going to do a very short webinar. All right? Um, just let's just wait for a little bit, guys. Oh boy, look at silver. So yeah, look at silver. Look at silver. Good damn you. God damn you. I'm gonna place this. Hey man, the fourth wall. How are you? So where the fuck are you? Oh yeah 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 yeah. Yeah. So here. Yeah, I'll just wait for a little bit. You know what? I don't know how many people there are here, but if I'm only doing this for 5 people, I'll just do this later. Um, let's have a look how many people are here. Uh, choppy markets today, yeah. 8 people watching, so I'm gonna do it anyways. Doesn't matter. Yes, just wait a minute. I have to place this and send it to my VIPs, right? Uh, here are the coordinates. Oh boy. Yeah. I want to target the highs. Uh, uh. Do you use a free lot size calculator for MT4? No, this is not free, but it's very cool. You should use it. It's $10 a month, so yeah, you should definitely use it. It's called. I'm sorry. You go here. Stop using free stuff, man. If you really want to be a trader, I mean, don't rely on free shit. I hate that. Go here, riskcalculator.app, and buy it. All right, so I'm gonna get trigger here. I'm gonna get stopped here, and I'm gonna target this. All right, we are doing part two of my free webinar. Just a second. Just sending this. This educational. I am not going to have a look at the market at all. If you have questions about yesterday or Monday, I don't remember. Go ahead and shoot. I'm sorry. I have a little bit of um, a cold. This is a 4R, and the risk is always 0.50%. God damn. All right. So, what did we do on? Yeah. What did we do on? Oh, last time we talked about market structure shifts. So we talked about my entry model, right? Market structure shifts, daily bias. All right, so we're going to talk about daily bias, how to spot the correct daily bias. Now, this is very, very important, guys. You know what? If there's only 9 of you, it doesn't matter. I'm going to delete this. You know what? I'll tell everybody that I'm going to make them private, so this is only going to be available for people that join. Just a second, guys. And I said, God damn. Okay, so daily bias, very fucking important, right? Because if you don't know the direction of the market, then you're fucked. You're never going to make money. Yeah, very fucking important. So the daily bias, guys. The daily bias. Today, we're going to talk about mostly daily bias. How to spot the correct daily bias. Then I'm going to talk about how to look for those entries using the bias that you just found. And then, woo, we're gonna put it all together. All right, so daily fucking bias. What I'm telling, um, the trade that I just placed, or the order that I just placed on the Euro USD is a little bit counterintuitive, or it's exactly the opposite of what I'm going to talk about. But I'll talk about that this particular entry after after talking about the daily bias, because I think it's important for you to understand what the hell I'm doing here. Uh, yeah. All right. So daily bias, guys. Daily bias. So if you know, I have boxes on my on my I have boxes here on my screen. I'm sorry if I'm a little bit slow. Like I told you, I have a cold and I'm a little bit medicated. So bear with me. I have these boxes. These boxes represent the the session ranges. This is the Asian session range. This is the London range. And this is the New York range. Yes, it is. This is the New York range. So basically, here, guys, what I'm looking for always is the end of the Asian session. I don't trade the Asian session at all. I never do. There is no direction in the market for me to take a trade on, and there's absolutely no volume. Right? I don't trade the Asian session. Now, hey, ABOB, no, no, you're not late. You are just in time, mate. So, what I do is I wait for the London session open, right? And I look for either a break of the Asian session lows and a break of the Asian session highs. Now, a real break of the Asian session lows is exactly, let me show you a clear example, guys. Maybe here. Very choppy markets. That's the main reason that I haven't placed any fucking trades. It's because the markets are just so choppy that it's end of year. Shit, look at that. It's end of year. What the hell? Why is everything changing? Oh, shit. Right, so a real break of the Asian session highs here on the Japanese yen, if you notice. So here's a real break of the Asian session highs, right? We do have a break of the highs and a break of the structure to the upside. I don't know if this break of the structure is clear enough for you guys, but there you go. Here's a break. Well, could be a better break of the highs, but this is a real break of the structure to the upside. Now, I would be looking for Japanese yen longs in this case, right? Because we do have a clear break of the Asian session highs, and a clear continuation of price to the upside, creating liquidity here for a pullback for me to get involved long. Very nice setup. Not going to take it though. Why are all my how do I do that? I mean, I'll figure it out later. Right. If you have any question, just go ahead and look at it on your and place the question mates on the chat. So this is a clear bullish market, right? After the a Asian session, I'm gonna be looking for longs on the London session, etc. Um, you know what? Let's have a look at this particular. How many how many boxes should I look for in the past? I don't think you can do that with this indicator. Doesn't matter. So, this is a clear break, right? A bullish structure, but also the Asian session high and the Asian session lows are used for liquidity sweeps. So yesterday we had a liquidity sweep, a very clear liquidity sweep. Let me see if I can find one today. I think I saw one, guys. Just a second. I don't know what the hell is going on here. Right. So I'm gonna take this example. It's fine. So if you notice here, price just swept with the Asian session lows and continued higher. Now, in this case, obviously we got a break of the lows, right? A break of these lows, and then a bearish continuation. But it doesn't matter, guys. So there's two possible indications whenever we have either the break of the Asian session high or the low, right? Either we have a real break, in which case we will have, you know, a real break and a break of the structure here. This is a bearish continuation. We will look for bearish price action. Hola, sí, dale. Bearish price action. When we have this fucking things like this is just liquidity sweeps, which means that market is just liquidating weak players, and then it's going to turn to the opposite side. In which case, we are going to look for longs, guys, for longs. So yes, these boxes for me are very fucking important when it comes to trading. Oh, look at this. I forgot to place my Oh man, I forgot to place my gold short here. Example, looking for gold shorts right now. Very, right, this is the fucking example I was telling you about. Here, on the London session, we have that liquidity sweep. You know, these highs are swept with, there's no clear momentum to the upside, and price just breaks down, changing the character or shifting the structure in this market to a bearish. We have then the break of the Asian session lows and then a break of the structure. This is very nice. I do not have, however, a setup to go short just yet, but I will be monitoring this. Depends on which time frame used to how is this day suitable to trade and there is direction or not. Now, I mean, because I day trade, I look at the markets from the 1 minute chart to the 5 minute chart, and I go up to the 50 minute chart to look for real imbalances. The most important imbalances are always on the 15 minute chart. Here we do have that 15 minute imbalance on which I am. For example, here we have that 15 minute imbalance on which I'm going to take that trade in gold right here. Here's that 15 minute imbalance. Check this out, right? This is quite important. So, here's that 15 minute imbalance. Right now, go back to the 3 minute chart. This is the 15 minute imbalance. I am going to take that breaker right here. I should have taken this breaker here. I'll probably just short at market right now. I mean, this is obviously a missed opportunity, right? So I'll just go short, um, and I'm gonna target this lows right here. So yeah, it's an enough good risk to reward ratio. I'll go short gold now. Sorry guys, I have to I have to do this. Yeah, I do have to do this. So my stop losses are going to be the highest, of course. Yeah. No. So these are short, and the stop losses here, and my target, my TP is here. So this is still very nice. 10 lots. I reckon that's bad. This is still a very nice watch. 3R. So I'm gonna take one lot. I don't know. So, right. Yeah, one lot it is. One lot it is. Cool. So that's 3R. Let me send this to my VIPs, mates, and we will continue. Um, oh boy. What is the price that I'm selling at? Just a second. 2038. Stop loss at I have this sick OCD with round numbers when I'm fucking training. I better send it fast because I am in profits now. I told you. I mean, the way that I trade is super simple. I mean, once you master it, 3R, reach 0.50%. Right? Once you master it, mate, I mean, yeah, this is phenomenal. Yeah, very good. Good trade. Uh huh. Just a second, guys. So, yeah, I mean, listen, guys, if you really want me to create an educational product for next year, I need to hear from you. So again, I'm gonna give you a link, and I need you to tell me what what do you think about my oh shit? What do you think about my entry model, my educational? It's in Trustpilot. Just go ahead right now. And type it right now. I'm gonna be here. I'm not going anywhere. Please do so because if I don't hear back from you, then how the fuck am I going to know that you want to learn from me? It's impossible, right? So, this is a great example of what I do, right? This is a great example of what you will learn to do, right? It's insane how how accurate this entry model is. Ah, yes. Yep. So, guys, I'm gonna be here. I decided to do this to do a long educational product, webinar. I'm gonna go get myself a cup of coffee just to go ahead and go to the link. I just, um, I go to the link I just shared there with you. Yeah, and tell me there what you think about this, and if you want an educational product for next year. I'll be back in about. I'll be back in about. I don't know. About 3 minutes. I'm just gonna go make myself a cup of coffee, and then we'll continue with the educational side of things. All right. I just joined. Did you explain balance? No, but I can. Yeah. Of course I can, mate. The market is about to open, though. How are you guys? The casino is about to open. I'm gonna only rock this one, I think. I do have this Euro USD. I'll rock both of them. So imbalances, very good question. Did you guys leave me feedback on my educational content or what? Boo 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 boo. Hoo. Okay. All right. So gold dumping, very good. So there you go. Now, question about imbalances. All right. What is an imbalance? Awesome, Loic. Thank you. Um, I mean, my entry model is quite simple, right? Very good, right? It's accurate. Zero drawdown. Because it's the end of the year, I'm managing my trades very aggressively, but you know whatever. So, imbalance is very important aspect of trading. Understanding imbalances because price either does one thing or out of two, either draws to liquidity or fills imbalances. That's the only two things that price does. I'm sorry. And I'm gonna tell you what a fucking imbalance is, right? Let me see if I can. Um, if I can. Here, right here. Here's a couple of examples. Very good. These are very good example. Now, here's an imbalance. An imbalance is an inefficiency in the market. Thank you, country cousin. All right. So an imbalance is an inefficiency in the market, right? The market has to price itself efficiently. And inefficient. And remember, this is an auction between buyers and sellers, right? It's an auction between buyers and sellers. That's what this is. That's what we trade. An auction between buyers and sellers. So basically, when there is an imbalance, it means that there is an imbalance between buying pressure and selling pressure. For example, and the way that you can see it on your chart is by looking at gaps. Now, here's how to spot them. For example, here, whenever you have a very volatile move like this one, right, just look at these three candle formation. I know that I told you that I don't trade candle formations, but this is very important. If you look at this volatile move to understand imbalances, you just need to do this, right? You look at the previous candle high or the top wick of the candle here, boom. Here's that wick. And then you look at the very volatile candle and then the low of the next candle here. Now, the wick high, let me thicken the fuck out of this right now. So, the wick, the top wick of this candle does not touch the bottom wick of this candle. All of this is the fucking imbalance between buyers and sellers. And I am going to show you how it looks on volume, right? I'm going to grab the volume profile, fixed range, just for this one candle. And as you can see here on the numbers, right? We got 38 lots long, 0 lots short, 31 lots long, 31 lots long, 0 lots short, etc., etc., etc. We got 0 fucking sellers here, whilst we got a ton of buyers. That, my friends, is how an imbalance looks like. So, whenever you see this kind of formation, you know, that's an imbalance, and you can trust that candle formation because the volume inside is going to be the same. Now, there you go. That's an imbalance. So large moves are on field orders? No, they're not on field orders. Price doesn't move without filling all the orders. That what is not what slippage is. What it means is that there were no orders to fill. You know, I understand your question. The reason that it went 34 0 34 0, it doesn't mean that there were left 34 buy orders there. No, it means that buying orders started with 34. There were none, so they jumped to the next price level. There were none, so they jumped to the next price level. Then more buyers came in, and now 55 jumped to the next price level. But there were none sellers until they tapped a level where sellers were placed, and then auction started. So that is what a gap is. It's not on-field orders. It's just orders that jumped from level to level because there were no counterpart in their trading. Yeah, I think I made myself fucking clear. All right, that's good. Good. Now that's an imbalance, guys. That is the main. That's what I trade. I trade market imbalances, right? So, let me tell everybody that you can still fucking join my webinar. Boom, boom, boom. Oh boy. All right. So I don't know if we are going to break even in this gold or not. Very sketchy price action. Uh, Boom. Just a second. I'm still inviting everybody, and I think I still have questions about imbalances. Oh yes. Let's see. Still an imbalance. Uh, um, it means the market will always come to the imbalance region before it will continue to the trend. I mean, well, you can never speak or talk certainties when it comes to trading the markets, mate. That is a big no-no. For example, here, right? For example, here, if I were, I mean, if I weren't short already, right? I would most definitely look at this imbalance right here for getting in short right here, right? Fuck it, this is it. All of this region right here, actually, all of this fucking region right here, the one the price is tapping at the moment, right? This is where I would look to get in short if I were in short already, right? Yeah. Yesterday or Monday I was talking about this particular a market structure shift, right? Leaving a big ass imbalance here. This is where I would get my shorts if I were in short already, right? So it's not that the market will always come back um, to imbalances before continuing with the trend, but the probability of price doing so is quite high, right? Yes. Hoping the USD kicks some fucking ass. Me too, eh? Me too, mate. Me too. Uh, But you know what? I'm not pushing end of year trading for me is very, 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 mellow. I don't take tons of trades. And yeah. What else can you say? What else can you say? Now I'm going to go ahead and leave the room open for questions. Anything you want to know. Anything you want to know. I'll be here. Anything you want to fucking know. You're welcome, country cousin. Um, anything you want to fucking know, I'll be here. Whilst I check my messages. Sorry. Whilst I wait for your questions, I'll check my fucking messages. No, this is not what I wanted. Uh huh. This is good. All right. Imbalances are fair value gaps. Yes. I'm not sure if my English is good enough to understand. Yes, fair value gaps, imbalances, inefficiencies. They're all the fucking same. Depending on your experience, how much monthly gain can we get with your strategy? I don't know, man. That's a question. I mean, you can't. That's a dumb question. Super, super dumb question. It's not about it because it depends. I mean, don't take it personally, mate. I mean, you have been with me a lot of, a ton of time. You know that I don't mean anything by this, right? But the thing is this, because there are no dumb questions. I hope you understand that there are no dumb questions. I used to ask this question a ton, and I'm going to explain to you why I said what I said. Because it depends. It depends on how much. I mean, it depends on how you manage your trades. It depends on how your average risk per trade is. It depends if you are trading every single session like me or not. It depends on a ton, on a ton, on a ton, on a ton. The only thing that you can do to certainly understand how much you can expect on average is traded by yourself, right? So it depends on a ton of stuff, mate. I'm just showing you what I do, right? I'm showing you how accurate my entry model is. The reason that is this accurate is because I have worked a shit ton of time on it, right? I have been perfection in this. I mean, because I'm a real trader, right? I'm not a guy that just is going to, create a couple of videos analyzing the markets and then, lose all their trades. No, I'm a real trader. I work my ass off on my entry model. No, it's not a bad question. There are no dumb questions made. I told you. It's a good question actually, because people might have the same question, and I already answered it. So good, 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 good. What can you say about the movement of U.S. oil today? I don't trade oil. I do not trade U.S. oil. That is not my jam, mate. That is not my fucking jam at all. I don't trade that market. I only actively trade the US dollar, the Japanese yen, and gold. And that's it. And that's it. Mhm. So, if you don't have any more questions, I am going to end this free webinar, guys. This free webinar was for you. I already know what to do or how to do everything that I do. This was really just for you. Yeah, and if you want me to create an educational product for you, Yemeni terrorizing shipping, so probably up. Yeah, I don't trade the market like I told you, mate. Yeah, I mean, be careful with that because the fourth wall is absolutely right. There's a ton of global macro that is going to affect this market. Sometime when you said close to 75% for 1R, if when you close 75% make less than 1R. Yeah, I mean, sometimes I make less than 1R, but it's a few pips, a few dollars. I don't mind myself about that, I'm not going to take time out of my schedule to calculate the exact result of the trade. Fuck it. I mean, you do you. I try to take 1 hour off. Sometimes I take more than 1 hour. Sometimes I take less than 1 hour, but it's fine. I don't know. I mean, again, ABOB, that is up to you, not me. I mean, that is up to you. Uh, 100%, 100%. In my opinion, is if you back test it, you will understand what to do. It's up to you. It's up how you feel comfortable trading. Hmm. So about this gold trade, still very much liking this. If I were not short, I would go short right here. I would go short right here after the liquidation of this weak players. Boom, boom. Here's where I would go short. A much better risk to reward ratio than the one that I have, if I may add. But that's okay. It's all the same. It's all the same. Every day I trade the same entry model. Every day I'm hustling, hustling, hustling. So, again, thank you for joining me, guys. This has been the free educational webinar. I am going to make these videos private. So yeah, and if you really want me, if you really want me to create an educational product, just go ahead. Oh boy, just go ahead and go here and leave me a review about that because there's absolutely no way for me to know that you are interested in an educational product if you don't tell me directly right here. Mhm. Biggest win and biggest loss. Biggest loss has been 1R. Biggest win has been um, 5R. I mean, I don't have big losses, mate. I do not have big losses. Just, I mean, the biggest loss that I've had is my usual loss, 1R. But the biggest win that I've had is above 5R. Because I led the position right to targets because I was asleep, to be honest with you. I normally take, on average, about 1.8 to 2.3 R per trade. And I have an above 75% win ratio. So that's good. That's good, 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 good. See what I'm, see what I mean? We got the liquidation of the weak players. Trying to get short here on the break of the previous broken lows. They got liquidated. The imbalance got hit, and the probability of this going down is high. Now, if buyers take control of this market, then I am going to get stopped out of break even. I'll probably do. But yeah, so leave me a review about my educational product if you want me to create something for you, right? If you want to learn how to trade like me every single day, how to find these sniper entries, if you want me to teach you what I do, just go ahead, leave it, leave that review, guys. It's important because if I am not convinced that you are really looking for this product, I'm not going to create it. I'm not going to take time out of my schedule to create something that people are not going to get into. So I need your feedback, right? And yeah, that's probably it for me, guys. So thank you for joining me, and I will see you later. Cheers.